Hey, Mark from Caliber Home Loans. It is July 10th, Friday, and we're going to talk about the markets today and what we can expect for next week. And I'm going to talk a little bit about forbearances and foreclosures and what my take on that is based on some numbers that I've just seen. And we'll talk about rates and where we think they're going and how to best serve your clients when they're out there bidding on homes. So let's go ahead and get started. So this is today's chart. So this is, again, this is bond prices. This is not bond rates. Bond prices and bond rates move in opposite direction. And you can see that since about 9:15, rates have been on a general, or bond prices have been on a general slide, which is pushing rates up. So pricing actually came out right around this time, a little bit before 10 o'clock for most lenders. And so that was at the high today. So you can see that we've lost quite a bit. Rates actually changed twice today after the initial. So we had 3 rate sheets today. And that's, usually we have 1, maybe 2, but it got pretty volatile at the end. So the lenders are pushing the rates up to cover the bond pricing. So overall, we lost about an eighth in rate over the course of the. So let's go ahead and look at what the week had to show us. So you can see that the bond pricing was generally up for most of the week, except for until about 2 o'clock today or 1 o'clock today, and then it kind of fell off the cliff. But overall, the bond price is still higher than where it started at the beginning of the week, which pushes the rates down a little bit. So let's look at the last month, and you can see that we're still a little bit higher than we were a month ago. So that pushes rates down. So we're still better off. And then overall, since March, since the Fed started buying, it's been pretty consistent. We did see this nice incline over the last couple of weeks, which pushed rates down a little bit. So that's good. But rates are still really, really low. I mean, I quoted before the last reprice, I quoted 2.8% on the 30-year fixed with less than 20%, with 0 points. So, now they had really good credit, but still, I mean, who can block it? A 30-year fixed for under 3%. So for next week, we got some reports coming out. So we've got the weekly jobless claims will come out on Thursday. The retail sales will come out on Thursday, and the housing starts will come out on Thursday. So the weekly jobless claims. So if they're higher than what we expected, that's actually bad for Main Street, and that pushes rates down, and vice versa. Housing starts, same deal. If the housing starts are actually higher than what we expected, that's good for Main Street, which pushes rates up. And then retail sales, same deal. If retail sales come in higher than what's expected, then that pushes rates up because it's good for Main Street. So the reason this happens is because when there's good news on Main Street, it's inflationary. And when you trade in bonds, you want the return on your bond to be as high as possible based on what you think the inflation rate is going to be. So if you think inflation is going to go up in the future, you're going to want to increase the yield or the rate of return on that bond to hedge against that inflation. So the investors drive the price down and the yield or the rate goes up. And that's basically how it works. Good news on Main Street is bad news for rates and vice versa. So let's talk a little bit about foreclosures and forbearances. A lot of people are freaking out about the fact that they think that house values are going to drop off the cliff in the next 6 to 12 months. I know CoreLogic came out with a report that said they think that they could go down 6.6% over the next 12 months. But you got to look deeper into the numbers, because it's heavily weighted by the West Coast and the East Coast, where they probably will have an issue with the higher priced homes really dropping off in value. But in the Midwest, I just don't see that happening. Another thing is Black Knight came out with a report that 77% of those that are in forbearance and behind in their payments, 77% of them have at least 20% equity. So why would you go into foreclosure if you're sitting on 20% equity? So the fact that you've got all this equity will give the homeowners and the lenders a lot more latitude in making decisions down the road. So, But this gives us a great opportunity to reach out to anybody we know, past clients, and say, hey, how's it going? And if your clients, you've got clients that are in forbearance, and this is a conversation you may want to have with them, and it doesn't look like they're going to get a job anytime soon, and they're worried about not being able to pay their mortgage over the long haul, it may be worth having a conversation as, well, why don't we just, we'll wait a while, of course, but if, if it comes down to it, sell the house and take the equity. Why would you do a foreclosure and not make any money on the deal and ruin your credit in the process? So I just think that some of these reports that are doom and gloom, including Susie Orman, who is telling people not to buy a home until September, October, because she expects everybody in the world to start foreclosing and there to be a fire sale on homes. Well, again, that might be the way it is in New York, where she is, but I don't see that happening here in Michigan or in the Midwest for that matter. I just don't see that happening. That's my take on it for what it's worth. Product-wise, there really isn't any news for products, any new products coming along. MSHDA's starting to get backed up a little bit on the underwriting. They're a good week out. So if you're doing an offer with a MSHDA loan, I would give it a good 45 days to close. Just protect yourself so you don't have to do addendums to stretch this out. Again, verification employment within 2 to 3 days of closing is playing havoc on closing dates. So we're doing everything we can to explain to the clients up front how this works. I had a client that we went out to do a verification employment, and the guy was on disability. So we had to push the closing out until he goes back. So stuff happens. So it's still kind of nutso out there as far as the verification employments go, but we're trying to work through that as best we can. So I just tell people up front, this is how it's going to work, and this is what we need to do. And sometimes we may actually schedule the closing around when they got their last paycheck, just so we don't have to push it off, 2 or 3 times. So, and I want to just say that it rained, really rained today, which was good news for me. So I was glad to see the rain. It hasn't rained in a week and a half, I think. So I'm happy about that. So give me a call, 248-705-8431. Let me know if I can help you with anything, and have a great weekend. Thanks a lot. Bye-bye.